Hi, today in this video, I want to talk about passive investing. So basically, if you invest in some passive funds like index funds, how the performance is gonna be overall. So I just want to quick show you. This is on the Yahoo Finance website, so you can see this is S&P 500, which is kind of is a good representation of the overall U.S. stock market. So you can see here, you can see this chart. This is a 20 years chart. No matter if you invest, let's just say just you simply invest in 2010, 10 years ago. So you can see here, if the index price was at around 1,000. So today, the index price is 3,000. So basically tell you, if you invested 10 years ago around 2010, today your money is tripled. So that's the power of the passive investing from the index. Follow the index. Basically, those since I study finance, then we in the finance industry, they did so much research on those things. That for long term, many like mutual funds, they are the professional money managers. They try to beat the market, beat the index. Most of the time, they over time for long term, usually they do not beat the market. So that's why the ETF, exchange traded funds, which is they just created funds to choose all the stock who is already in the index. So this way they they have less people to pick the stock, which stock is the best performance, things like that. So that just significantly reduced the cost of the funds. So if that's why many people would say, why index funds, ETFs, it's become so popular nowadays. Well, it's because their performance, they have a better performance than lower cost. That's why, if you are very young, then you just get started. So then also, if it's very difficult for you to pick the stock to which to invest, so it's passive investing. You just buy index funds like ETFs, so which will long term, for overall long term, will give you pretty good investment growth. So this is alternative for investment growth for long term. So okay, so after all this, I just want to say, if right now, if you want to pick a index funds ETF, that you want to basically buy the whole stock market. So this way, you basically one funds buy everything in the United States stock market. Then their funds management fees are very, very low. My one recommendation is the Vanguard Total Stock Market Funds. It's really good funds. Their expense ratio is the cheapest one you can find on the market. So it's their expense ratio is 0.03%, which means if you invest like $10,000, your annual fee is only $3. So if you invest $100,000, your annual fee only only $30. So compared to many other managers that charge you 2%, so this one is a pretty good deal. Then so that also you can see how big is this funds. They currently have 800 billion, which is almost $1 trillion funds. So which means even they just charge 0.03%, their annual revenue for this funds is about like a 0.3 billion. So that's pretty good. So that's why this one is is so popular. So I want to show you this one. There are how many stocks they holding. They hold this in this funds. One fund they hold 3,513 stocks currently. So which are the top 10? You want to know what are the top 10 companies that they are holding. Top 10 is, let's say, top 10 there is 22.9%. Their top 10 company you can see here is Microsoft, Apple, Amazon, Alphabet, Facebook, Johnson Johnson, Berkshire Hathaway, which is Warren Buffett company, with P&G United Health Group. So basically, they is the top kind of the largest U.S. company. So the rest of the 3,511 companies gonna be the rest of the 77% of these funds. So they have a little bit of foreign holdings. Mainly this fund is in U.S. They have a little bit of foreign holding, but it's fine. So then which categories, which areas they are holding these funds. So you have the basic materials is 2% of these funds. Then consumer goods is 7.9%, consumer service 14%, financials 16%, healthcare 14.8%, industry 11.8%, then oil and gas is 2.8%, technology is 24.7%, telecommunication is 1.9%, utility is 3%. So this is a component of those funds. So they pretty much covered a little bit of everything in every industry, every sector of the United States. So you kind of pretty much covered everywhere. So if any sector, perform pretty good, so you are covered. If some sectors they perform bad, so they will affect the whole funds a lot. Too. So yeah, that's the beauty of the diversification. So it's you well diversified in all the categories. Then also, this is the detail of the funds information. So they are kind of if you say is large cap, middle cap, or small cap. So this is more towards to large cap. That's why. So yeah, this is a Vanguard total stock ETF. So when you can search the funds, get the funds information on the website. Also, when you buy funds, they usually give you prospectus, so you can read their prospectus, which is a very long document. So they may give you all the 3,000 stocks they're holding in the funds, everything regarding fees, everything. So price performance here. So basically, it's large blended funds. We usually say if it's larger cap, they have two types. It's valued and growth. Valued, they usually they probably pay you more dividends. Growth, they probably more capital gains. So this one is blended value and growth. So this is a good thing to own. This is just the things that I want you to know. Yeah, when you when you search funds, this is the company website that you can do. If you know which company. Then another thing you need to know, Morningstar is a very good tool for you to research like mutual funds, ETFs, because they are specialized evaluating different funds. So if you know the funds that you are searching, so you can simply just type the VTI here, then you can get information. So Morningstar usually give ratings in different funds. So they total have from 1 star to 5 star. So this one being rated as a 4 star funds. Even their analysts say Vanguard Total Stock Market Index ETF VTI is one of the best core US stock funds available. So yeah, that's the thing. So basically, they also tell you the performance. Let's say if you put a $10,000 about 10 years ago, so today your funds will grow 33,130, so which is tripled your money. So yeah, this is basically very close to the S&P 500, triple your money in 10 years. So yeah, I want to show you in these funds, then you can see their performance, risk, returns. Okay, portfolios. So here they basically tell you it's US equity. So you have to know many ETFs, they are if they're focused on like bonds. So this one is focused on the equity. Equity basically is all the stocks. So there's no, so they have a little bit bonds, but not much. So they hold a little bit of foreign equities, but it's very small. So that's something you need to know. Then that's the components. That's the same thing you can find at the Vanguard website as well. So then you can see they give you the holdings. This is it's more than, you can see more than the top 10 holdings. And besides the top 10, we just look at it. Then what else they hold here? Like a JP Morgan, Intel, MasterCard, Home Depot, Verizon, AT&T, so ExxonMobil, so Netflix, Cisco. So they basically they hold a little everything. So this is something you can use on the Morningstar website to see their how they've been evaluated in the Morningstar website. Then I want to see, well, you you can use Yahoo Finance as well. I just want to see, this is S&P 500. Then we can simply to compare these funds with the S&P 500. You have to know that S&P 500 is the largest 500 stocks company holding in this index. Then Vanguard is holding this total market. It's holding more than 500. Okay, they hold over 3,000 funds. So they are more comprehensive. That's why they say it's total market. So they however, you can see their performance like from the inception. These funds actually over 20 years old, which is good thing. They have 20 years track record, so their funds manager is more experienced. So yeah, then you can see their performance from the beginning to now. They actually outperform the S&P 500. So if you do 5 years almost the same. S&P is a little higher. 2 years it's a little okay. Then 5 year to date. Year to date, actually this funds is a little underperforming compared to S&P 500. Just because they they hold many other funds as well. Since total market, they probably hold some mid cap and a little bit small cap as well. So that's why they usually mid cap, small cap, they is a little underperforming than the largest cap. So which is a good thing. Which is tell you. Okay, I'm gonna show you. Let's just say VTRA. Just gonna show you the chart. So basically, if you see the 1 year, 2 year, so which means here we know currently market is they dropped significantly in March, so it's a V shape. We in our industry we say it's a V shape recovery right now. So many others they recovered pretty good. So actually it's a good news for you if this one not recovered as much yet. Which means if you buy now, this is compared to the all-time high, so still low, still have a little bit time to recover. So basically, you can you buy at a little bit relatively lower price. So that's a good thing, good news for you. If you can see if it's for long term, it's perform pretty good. So right now, if you buy, still is not all-time high, so you can. It's a good opportunity to get it in. So that's just something I want to say. So so basically, if you want to just get it in a fund, just for long-term investing, so you don't know any other things funds to get in. This one actually is a pretty good thing for you just to get started with VTI. So this one basically buy the whole United States stock market. The majority of the stocks, they probably hold like majority of the stocks in the funds. So which means um, you can capture overall the market long-term growth. So that's just something. So I if you, I would recommend a fund for you just to get started for a beginner. This is a fund to get in. Okay, so then if you want a little bit more sophisticated, then want to get in different different cap. Let's say usually for our professional managed funds, we usually try to do like a big cap, middle cap, and a small cap. So just because you can capture different category, is also for us to rebalance the portfolio. Usually, the currently the like a big cap, the less volatile, like middle cap and the small cap, they are more volatile, so it's more riskier. However, for long term, they usually, they for long term they perform well than the larger cap because just in that way. So here are some lists we often use for ETFs. So you can see if you want to get a big cap, you can get in this especially for this one. I'm recommending for young people. If you are old and retire, so there will be different selections because for you are young, you probably want to more focus on the growth rather than capture the dividends, especially if you invest in your brokerage account rather than your retirement account. You don't want to get too much dividend because the dividend are taxed at your ordinary income tax rate. So you usually pay more tax on it. If you invest in more growth stock, so they usually capture the long-term growth rather than the dividend. So you want the growth rather than the value stock. So here's this is a Vanguard S&P larger cap growth. Then this is a Spider, which is the one of the famous company on State Street. They sponsor. This is another famous S&P 500. So and QQQ is a good one too. So for you, this is top. This four of them. They are good for you to get in the larger cap. Then next, you can get in the middle cap is you can IWP is iShare. Here I just want to mention a little bit. So for all the fund, there are about, if you can buy in United States, the ETF available, you can buy probably over like 2,000 something ETFs. And so those are just the ETFs. Then this is middle cap. Then this is the middle cap you can use. Then those are the small cap growth. So this is in US as well. So they are relatively lower expense fees. So to get it in, then yeah. So yeah, if you want to like say you want to do large cap, middle cap, small cap, so basically that way you capture all different size of the company, so you can pick each one of them to invest in. That's fine. So if you don't want to do that, you can just do Vanguard total stock market. You can just buy one funds. It's fine too because they kind of Vanguard. They captured all the the whole stock market. So if you notice that here, the larger cap, pretty much kind of have better returns than the small cap. Small cap is usually more volatile. So that's the middle and the larger cap. Since Vanguard total stock is have a little bit everything, that's why their performance is a little bit lagging than the S&P 500. So, but which is good thing. So you buy at a relatively lower price. So then you can let it grow. So that's just something I want to say. So also I have some ideas about just currently for the pandemic situation. The mainly sector get hit pretty bad is like aerospace. Here okay. Before I go into that here, if you want to get some like international exposure for your investment, so you can get in like this VEU, this is the Vanguard, all world stocks except the US, then iShares, then Vanguard, then iShares. So this is the list. So if you want to buy international, some stocks, so this is a good index funds for you to get in. However, you have to know, you can see the performance here. International is not performing well, and also international is relatively volatile. So for the last 10 years, US stock market definitely had a better growth than the international. So just something you need to know. So I have another suggestion. If you want to kind of get in some the sectors that get hit the most by the pandemic, this is aerospace, which is related to airline. They are currently down year to date is elective 25%, but overall they are actually pretty good. Let me just go to see here. Okay, so if you can see they're being hit pretty bad. If you see 5-year growth, see the 5 years they're actually pretty growth pretty good. This is not that volatile. So that just because this pandemic they get hit pretty bad. So they are they are on the recovery, but it's they hold this is all their company hold these funds holdings year to date. You can see that's how much they hold all these assets. And year to date here. So that this is just is a good thing to capture the pandemic. Then another one is the financial industry. Another then is consumer service. They all down right now. Then I want to share this one is for the tech company. So if you want to, this one actually performed pretty good because they are holding the top, all the bigger information tech company. You have to know there for long term that definitely is a growth company. Especially if you buy all those individual stocks, they're kind of a little pretty pricey. Like Apple, it's $300 per share. But if you want to like hold all of them, you can just get it in these funds. These funds actually expensive ratio is 0.1%. It's relatively high, but it's for 5 years, they definitely good growth funds to get in. So anyway, so that's just my recommendations. If you want to get in, this is a long term. Definitely is a good long term hold growth funds. So yeah, this is last four is something that if you want to capture all the pandemic growth, so that's a good fund to get in to do that. So anyway, so that's just say if you want to get in the funds, that's how you want to get in. So if you want to simple, just want one thing to get every stock, this is VTI is a pretty good funds to get in. If you want to get the big, middle, and the small stock caps, so you can pick here from here. If you want the international, this is some international funds you can get in. So if you want to capture all the growth of the pandemic, this last four is a good thing to get in. So anyway, so that's my recommendation for this.